Hello everyone, welcome and thanks for watching the Market Report. This show airs every Tuesday on the Cointelegraph Markets and Research YouTube channel. On today's show, we'll be covering the regulatory environment that has been limiting Bitcoin's upside and the odds of a dump to $28,000, given the extreme FUD going around. Our first news, written by Derek Anderson, covers Bittrex Exchange and founder being charged by the SEC. The US Securities and Exchange Commission has filed a complaint against the Seattle-based exchange as Bittrex prepares to stop offering services in the United States. The SEC has charged the crypto asset trading platform Bittrex and its co-founder for operating an unregistered national securities exchange, broker, and clearance agency. The agency filed a separate charge against Bittrex Global. The SEC, the SEC, argued in its complaint that OMG, Dash, Algorand, and a couple of other tokens traded on Bittrex are securities. SEC Enforcement Division Director Gerber Grewal said in a statement, "Today's action not only holds Bittrex accountable for misconduct, but should also send a message to other non-compliant crypto market intermediaries." Okay, so in my opinion, there's an almost explicit reference to Binance, Bybit, and OKX, which have notoriously been taking US clients through VPN and other evasive strategies. But to be 100% honest here, I don't think the SEC has a case besides a multi-million-dollar fine and forcing them to shut down operations in the US specifically. Some argue that market makers will be impacted and consequently drive down the liquidity for those exchanges. However, those companies, the arbitrage and market maker, they have offshore entities, so structures based in Europe, Asia, and other regions. So there's nothing stopping them from trading there. They're only going to be forced to shut down operations that have been issued directly from US, most likely using VPN or other evasive strategies. As for the complaint that some tokens are securities, I don't recall the regulator successfully shutting down a project by merely citing it on a case against another entity, which in this case, Bittrex. Sure, eventually those tokens can be delisted from US exchanges, but there's a long road ahead, as history has shown us. Now, onto the show's second topic, a news covered by Ana Paula Pereira, a fellow Brazilian. US Congress to introduce new draft bill for stablecoins. Failure to register as a stablecoin issuer could result in up to 5 years in prison and a fine of $1 million. Insured depository institutions seeking to issue stablecoins would fall under the appropriate federal banking agency supervision, while non-bank institutions will be subject to Federal Reserve oversight. Issuers out of the United States would also have to seek registration to do business in the country. I think, for me, that's the most important part. Also, as part of the drafted legislation, is a 2-year ban on issuing, creating, or originating stablecoins not backed by tangible assets. There's a clear statement here. We, the legislators, don't want algorithmic-backed stablecoins or any other operation that is not solely backed by US dollars directly, either on US treasuries, short-term bonds, or deposited on US regulated banks. Moreover, either they are subject to Fed regulations or issuers can be thrown in jail. This is especially painful for Tether, because certainly there are North Americans trading Tether stablecoins using exchanges because they're not trading directly with Tether company. They bought from a third party on an exchange. So the Tether issuer, the Efinex company, can say to the regulators, it's not us selling those tokens. They're buying from other entities on those exchanges, there's nothing we can do to stop it. On the other hand, I highly doubt this impacts Circle or Paxos, because those are US regulated companies. So in my opinion, the most impacted stablecoins, if that pills go through, is Tether and DAI from MakerDAO, so the algorithm-backed stablecoin. A draft legislation may or may not be approved and could be subject to court rulings. For now, I would not panic sell any stablecoin solely based on this. It's too early to tell. The last week for today's show has been written by Turner Wright, and it shows US court summoning Justin Sun, Tron's founder. Moreover, they threaten default judgment if no response. The summons was related to a civil lawsuit filed by the SEC against Justin Sun and others over allegedly offering and selling TRX tokens as unregistered crypto asset securities. According to the court, judgment by default will be entered should the Tron founder fail to respond, suggesting penalties related to alleged securities law violations. In March, the SEC filed a civil lawsuit against Sun, the Tron Foundation, the BitTorrent Foundation, and Rainberry over the orchestration of unregistered offer and sale, manipulative trading, and unlawful touting of Tron as a crypto asset security. In my view, Marcel's personal opinion, this case looks very tough for the SEC, as Justin Sun apparently has multiple nationalities, plus his company is based in Grenada, a tiny Caribbean island, perfect for evading tax and civil cases. That shows us how desperate regulators are to show some effort to the sitting president, namely the Operation Chokepoint 2.0, a multi-agency strategy aimed to suppress cryptocurrency business and fiat payment railways in the US. Again, that is merely my opinion and does not necessarily reflect Cointelegraph's view. However, it seems too much of a coincidence that the Department of Justice, the CFTC, the SEC, and other agencies decide to chase multiple exchanges and founders after 5 or 7 years of existence. So, given the bearish scenario and extremely regulatory FUD, I would not be surprised if Bitcoin retests the $28,000 level. One thing you guys need to have in mind is that a 3.5% volatility, which has been the case for the past week on Bitcoin, so moving from $29,000 to $31,000, a $2,000 move during a week, is nothing out of the ordinary for Bitcoin. So sure, we can have multiple retests of the $31,000 or even retest of the support level at $29,000, and that not necessarily reflects the market intention to go higher or lower. But what whales, the large traders, need is some kind of evidence that the market is spooked or the market is extremely optimistic. For example, if 10 out of the top 50 altcoins rallied over 20% over the last week, they know traders are excited and they're gonna use that in their favor to pump the market to higher numbers. But that hasn't been the case over the past week. On the other hand, if they feel that the news out on the outlets such as Cointelegraph has been mostly bearish, mostly focused on regulation, on founders being summoned to court, they know it's the perfect time to try to push the price down. So in my opinion, it's much easier if we break from this 29 to 31,000 range to break lower. It doesn't necessarily mean that the rally for the year it's over, that we're gonna crash down to $24,000. That's not it. It's a retest of the $28,000 support. It's my base scenario, which could happen over the next couple of weeks. Well, that's it for today. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link in the video's description. Remember to like and subscribe the new Cointelegraph Markets and Research YouTube channel. See you next week.